My swing trading strategies are up over $65,000 in the last 12 months. In today's video, we are going to go over both the entrance and exit conditions of these strategies, as well as showcase to you the trades they've been taking over the last year. Now, this is a little bit of a hard video to make because the strategy has taken some massive wins on some much more volatile names over the last 12 months. But to avoid survivorship bias and to keep this video as analytical as possible, I want to sort of stay away from those kind of one-off trades on much more volatile names. So the way we're going to do it, the way we're going to research these two trading strategies in today's video is we are going to look at their performance on the Magnificent Seven over the last 12 months. The Magnificent Seven stocks, of course, being Apple, Tesla, Meta, Google, Nvidia, Microsoft, and Amazon. Now, I hear the comments being typed out already. Trey, how is that different than any other type of survivorship bias if we're just looking at stocks that have, of course, performed very strongly over the last 12 months? Well, 12 months ago from the time of recording this video, of course, would be September of 2024. Well, as you can see here, the Magnificent Seven stock concept was coined in 2023, and it was the exact same list of 7 stocks. So this is not just a list I'm conjuring up so that this video looks good. These 7 stocks have been strong. You could have been trading these over the last 12 months. The idea of the Magnificent Seven has existed now for well over 2 years. Guys, no one's making you buy crap companies and hoping they turn around. You can trade already existing strength. That's actually something I preach a lot on this YouTube channel. So as aforementioned, we'll be covering 2 strategies in today's video. Speaking of things I like to preach about on this YouTube channel, I am a very firm believer in trading both a continuation and reversal trading strategies concurrently together. They both have their downside risks, which we'll discuss as we're talking about the strategy, and trading both of them together is what helps to even out your own personal portfolio's P&L curve consistently up and to the right. So for starters, we are going to talk about the continuation trading strategy. And just real quick, if you're interested in importing either one of these strategies, they are both available alongside over 150 other custom coded strategies, studies, scanners, conditional orders, etc., all on my website, daytradingstrategies.net, which will be linked in the description down below. So throughout this video, if you become interested in these strategies or just the idea of codified trading at all within Thinkorswim, daytradingstrategies.net is the resource for you. So the entrance condition for this continuation swing trading strategy makes use of one very simple price action based study, that being this percent change study that you're seeing on the chart here. Now, all the percent change study is measuring is the difference in the closing price of the current candle from the closing price of 14 candles ago. That's it. Very, very simple price action study. It's just a way for me to quantify strength. When you're building trading systems, you can't just have an idea. You can't just say, I want to buy strong stocks, right? You have to be able to assign a value to that for 2 reasons. One, so that you can build the trading strategy itself and build the testing around the strategy. And 2, so that you can build the scanner, of course, to find the trade setups. All of my trading strategies, 90% of my trading strategies that I've published on my website also have associated scanners published on the websites so that you can find the trades associated with them. Anyway, let's take a look here at the most recent entrance condition on Google, which, by the way, still in this trade and performing very, very well. Anyway, very, very simply, the percent change study must be greater than 5. So the current close must be higher than 5% from the close of 14 bars ago. That must be true for 3 candles in a row. And once it is, the strategy enters the close of that 3rd candle. This is how I scan for continued strength, multi-day strength in a ticker before I'm looking to run and buy it. I don't want to buy just like the first big green day. I want there to be continued proof of strength. So as you can see here, we get 1 bar where the percent change, if you can see this small number right here, I don't know if you'll be able to see it on YouTube, but I'll tell you, the percent change on this bar, 5.3, then 13.4, then down to 11%. So on the close of that third candle, obviously all three being over 5%, the strategy enters. Hey, we have multi-day strength going on in Google. Let's go ahead and buy the stock. Now, this strategy has three different exit conditions. And I will say this up front, and most of my returning subscribers to this YouTube channel will know this. With my continuation trading strategies, I have no upside profit target. I tell you that because all three exit conditions are essentially stop loss orders, but two of them being trailing stops looking to lock in profit, and one, of course, being the, hey, we're down, let's go ahead and get stopped out of this trade. So the first trailing stop order we're going to talk about will be what you see occurring here on this meta trade. And it has to do, once again, with this percent change study. If the percent change gets less than -10, which you can see happens on this candle here, if we are down 10% from where we closed 14 bars ago, which is true here on this meta drawdown, then we go ahead and exit the stock. Hey, the stock is on a pretty large drawdown. Let's go ahead and get out of this thing before it just continues to grind down on us, which you can see happens here. Ends up being a pretty good exit before continued weakness. You end up locking in a pretty nice trade there on Meta. The next two trailing stop orders have to do with a different study. Once again, a very simple price action study. I don't like to use studies that are too complex and with too many complex equations behind them because, as you all probably know, those studies end up lagging a lot. But there are a handful of very simple price action studies like the percent change, and now like this one we're about to talk about being the ATR study. ATR stands for average true range. All it's measuring is the average distance in gross distance, like actual number distance between the high and low of the last 14 candles. Basically, it's giving you the current volatility of the ticker. I love using this study for a trailing stop because it allows you to give more room to breathe to the downside on volatile tickers and less room to breathe to the downside if the ticker isn't volatile, right? Let the thing be weak within its own volatility bands, but as soon as we get out of that, let's go ahead and get out of the trade. I use this study for, once again, the next two trailing stop orders that we're going to discuss, and they are both actually represented also by the lines on the chart, being the cyan line and this purple line. Let's talk about the cyan line first, as that is the reason for exit here on this NVIDIA trade example that we will talk about now. So what this cyan line represents is the previous bar's closing price minus the ATR value times 1.5. So take the ATR value times 1.5 and subtract it from whatever the previous day's closing price is. If the stock touches that value, or, and I like to showcase this as an example as well, because I actually built this into my code. Very important that your codes don't cheat. I very much make sure I check that in every strategy that I publish on my website. Or if you get a massive gap down, kind of like you did here in this NVIDIA trade, if the stock opens up below the line, then the strategy exits at the open of the candle. Because of course you couldn't have gotten out at the line here. It wasn't at the line at time of open. It was below it. That is where the strategy exits. Unfortunately, a massive gap down here on NVIDIA when this trade exited. But anyway, pretty simply, previous day closing price minus ATR value times 1.5. If you touch that value, go ahead and exit the trade. Let's talk about the third and saddest way to exit a trade, that being the stop loss. Now, let me say this too. This actually will happen a lot. With every continuation trading strategy that I have ever built, they actually have a lower than 50% win rate. The idea with a continuation trading strategy is that you are going to lose most of your trades. Listen, when you're chasing strength, most times the stock is going to fall back down from that strength. The idea is that when you are right, when the stock does continue and strength continues to the upside after your entrance, you can be right much larger than you are wrong. Basically, your winners are much larger than your losers. That's the idea of a continuation trading strategy. And the next strategy we're going to cover, being a reversal trading strategy, is the exact opposite. Much higher win rate, but a much worse risk reward. Those are sort of the two cons of these trading strategies, and why, once again, I'm a big believer in trading both of these types of strategies simultaneously so that they help to offset the cons of one another. Anyway, I'm getting a little off track. Not really, still talking about the strategies, but let's talk about now when we get stopped out of our trades, represented by this purplish colored line on the chart. Once again, it is the ATR value times 1.5, except rather than it being subtracted from the previous day closing price, it is simply subtracted from our entrance price. So we don't let the stock like run against us either all the way down to minus 10% on the percent change or until it's volatile enough to touch this blue line. If we are red in the trade, we get out quickly. And this time, rather than the value needing to touch that price, we want it to really confirm its weakness. Instead, it needs to close down below that price. Because we always have the catch-all here too, right? Like this stop loss was 204.74. But if it got super volatile, if it got super, super weak this day, there was a flash crash or anything bad could happen. Once again, even if it would have kept going down to about 199 and touched this blue line, then we would have gotten out there. So you always have the like hard catch as well. So for our stop loss, we don't sell at the line at the entry price minus ATR times 1.5. We sell when a bar closes below that line. Anyway, that's the continuation trading strategy, the entrance, and all three exit conditions. Let's quickly go over actually the performance of this strategy over the last year on the Magnificent Seven stocks. Apple down $3,500. This actually, for some reason, being the only stock that was red in the Magnificent Seven using this strategy over the last 12 months. Remember that it was down, what did I say? $3,500. Next, Nvidia up almost 12 grand, actually currently in an active position from $110 all the way up to over $175 a share. That's why we don't have upside targets on our continuation trading strategies. Get stopped out quickly when you're wrong, but when you're right, let it be right for as long as possible. Next up, Microsoft up $4,500, also in a very nice winning trade. Currently, next up, we have Tesla up $16.2 $1,000, also currently in a winning trade. Tesla's been exploding the last three trading days. I think Elon just bought a bunch more stock or something. I think that's why it gapped up so big today. But anyway, in from $321, now trading up over $421, up over 100 points in this current open position. Next up is Goog. This one we've already looked at, also in a very huge winning trade right now. Currently up, let me just zoom this up, currently up $9,700. The next one is Apple, $7,700 up over the last year. And the seventh and final, but not least, Meta up $13,000, currently in a huge winning trade over the last year. So 6 of the 7 stocks have been green over the last 12 months, and that is a profit of about $59,500 on the Magnificent 7 stocks using just this one continuation trading strategy, once again, just over the last 12 months on, of course, the daily time frame, as this is a swing trading strategy. Before we move on, I guess telling you how much I'm up without telling you my position size doesn't really mean anything. On every single trade, I have the strategy currently set up to enter a $25,000 position. Of course, on all of my trading strategies, I have an input parameter set up so that you can easily change this. If you have a smaller account, say you only wanted to take $2,000 positions instead, you could simply enter that in and apply, and you can see the statistics and the share size on that dollar amount instead. But the $59,500 that I just mentioned is on only $25,000 position sizes per trade. So you've done pretty well. $25,000 position sizes up $59,500. That is a return of greater than 100% of your position size just in 12 months. pretty dang good. Now, I know we're already 15 minutes through this video and we've only covered one strategy, but trust me, the second strategy, my reversal strategy we're about to go over, is much more simple. It's not going to take me 15 minutes to get through this one. So the entrance condition for the reversal strategy: the stock must be currently trading above the 200 length simple moving average, which is represented by the cyan line on the chart. By the way, all of these lines you're seeing on the charts are also built into the strategy itself. You can see the only code I'm running on my chart is my strategy. I just have these studies on the chart built into them as well. So another nice feature if you go import these strategies from my website. Anyway, must be trading above the 200 simple moving average and must currently be below 40 on the relative strength index study. So the thesis behind this strategy is I want to buy dips, but I only want to buy dips on strong stocks. I don't want to be buying here. I don't want to be buying any of this. As you can see, the RSI breaks below 40 here as well, but the stock continues down from $125 a share down to $102 a share, and maybe even worse as time goes on here. Yeah, actually, it ends up getting a lot worse, all the way down to $90, $89 a share. I don't want to be buying this kind of weakness. Instead, I don't want to be buying this kind of weakness. Instead, I want to be buying this kind of weakness, hopefully looking to get these bounces, correct? Now, you will also notice with this trade here that the strategy is entering more than once. I have the strategy set up to scale in up to 10 times as long as those conditions are true. Above the 200 SMA, below 40 on the RSI, it will buy up to 10 times. Reversal trading, it's nearly impossible to perfectly time the bottom every time you buy a stock. So when I trade reversal type trading strategies, that's how I like to do it. I like to scale in to the positions, buy the weakness as it continues, build your position size larger and larger the longer the weakness wants to continue. On this trade, we just got to enter 2 times at about 130 and about 128.5. Then we got to exit at 144.36 just a handful of days later. Our exit condition also, once again, very, very simple. If the candle closes above the highest high value out of the previous 15 candles, we will get out of this trade. So drawing this line back, looking at the last 15 bars, that would be this high here. We obviously close up above the highest high value out of any of those bars, so we exit the trade. A very simple price action exit, and that is our only exit condition with this strategy. Yes, that does mean if it takes losers, sometimes it can take pretty hard losers. Once again, that is the downside, that is the risk involved in a reversal type trading strategy. So the continuation trading strategy, the large risk was that sometimes you're going to go multiple trades in a row without getting a winner. Well, in the reversal trading strategy, your win percentage will be much higher, but your winners are smaller than your losers typically. Once again, you combine those two trading ideas and trade them both at the same time, you're going to be a much better trader for it. Let's go ahead and look through all of the Magnificent 7 stocks and the performance of this strategy on them. And actually, before we do, I'm going to load in my back test data labels. This is another custom study that I've built that is also available on daytradingstrategies.net. And basically, this study shows you the important statistics of the strategy itself. I didn't turn it on for the last strategy, the last strategy, because it doesn't measure current open trades. You'll see the total P&L reads $1,100 when we're actually up $1,700 because NVIDIA is in an open position right now. And the last strategy, you're in trades for so long that most of them were in large open positions right now. But I want to show you in this one, and I want you to keep an eye on this win percentage here and notice that the goal of this strategy, once again, is to have a very high win percentage. So on NVIDIA, up, as we said, $1,700. We go over and look at Microsoft. We are currently just up $150, actually only taken one trade, and actually just got out of this trade yesterday. Strong stock, got a dip. We actually only got to buy this one once. There was really no scaling with this one, thus why the win was so small. But hey, we'll take it. We're not going to complain about a W. Next up being Tesla, as you can see here, up just over $1,000. And here is one of those large losses that I talked about. Scaled in, scaled in, scaled in, kind of got hammered for a while. Eventually, every stock bounces. Eventually you get a bounce, you get to exit on a bit of strength there at the end instead of panic selling the lows. So ended up not being so bad. That's kind of the whole purpose of this exit strategy. Listen, every stock bounces eventually, especially when you're trading strong stocks. Another reason why it's so important to trade strong stocks. I would be very afraid to employ a strategy like this on, like, I don't know. I'm trying to think of what's been like LiDAR. LiDAR has been ridiculous of late. The strategy's actually never even entered. It's actually never gotten weak enough for a dip buy. But just the idea of buying a stock that is this volatile up and straight back down, I would be very afraid to employ a strategy like this on. What's been another ridiculous stock? Circle has been, I don't know. I can't think of a good trade idea to show off. But the point is, I would be very afraid to employ the strategy on weaker names, not strong names like the Mag 7. Google, only taken one trade, got stuck in a loser for a while on this one. As always, the stock's eventually going to bounce. Got out for just a $200 loser. Go on over to Apple, caught a very, very nice win on Apple, up over $2,000. Amazon, up over $1,000. And Meta just up the $115. Once again, very nice winner happening here behind my head. Then you kind of got stuck in that same losing situation. Obviously, the Mag 7 stocks are all going to kind of move together. Pretty similar kind of dips and rips going on back in early first half of 2025 this year on a lot of these names. But as you can see across those 7 stocks, that puts us up about $5,500 with this trading strategy. And with this trading strategy, I allow it to scale in, remember, up to 10 times. And each one of those scale ins, I have my position size set to $5,000. So the strategy can enter up to $50,000 positions, but trades like this, as you kind of foresaw, are more so usually what ends up happening. Scale in once, scale in twice. It's only a $10,000 position before you get this nice bounce that ends up making you over $1,000. So a little hard to give the exact position size, like the exact average position size of the strategy. But once again, what I have mine set up, the $5,500 that you just got to see, $5,000 position sizes that will scale in up to 10 times. So if you're interested in easily importing and saving these 2 strategies or over 150 plus other custom thinkorswim codes, once again, head on over to daytradingstrategies.net. Every single week, I am adding usually multiple new codes to the website. Thus, I do have my website set up as a subscription type service. Obviously, you can sign up for the monthly or the annual plan. With the annual plan, obviously, you will save yourself a good bit of money over the next 12 months of access. That's a long time, guys. 12 months of access to every new code I will add to this site, as well as, and maybe even more importantly, you will get lifetime access to the Discord server. This Discord server currently consists of over 685 members. That's a lot of people that have signed up for the annual plan. That's a lot of eyes on the market. Always talking about what's going on. Just a great place to be if you are interested in always being able to keep up with whatever is moving throughout the trading day. So once again, you get lifetime access to this when you sign up to the annual plan on daytradingstrategies.net. And just because I think once you see how easy it is, you're definitely going to want to sign up to the website, I've made a handful of my strategy, study, and scanner codes completely free on the website. Completely. You don't have to make an account. This isn't a 7-day trial. I don't want your email for some crappy newsletter. Nothing scammy like that. Literally head on over to daytradingstrategies.net, click on that free codes banner, and you'll be taken straight to this page. I'm actually going to leverage this to showcase to you now in this video just how easy it is. So every single one of the 150 plus codes on the website comes with one of these unique TOS share links. All you need to do is copy this URL. Back within your thinkorswim, you're going to go to setup in the top right, open shared item, paste, preview, and import. Just like that, in about 3 mouse clicks and 5 seconds, you can have any and all of the 150 plus codes imported from my website and saved locally. They're saved locally, meaning once you import them, they're your codes. These will be saved in your thinkorswim account forever. As long as that Thinkorswim account exists, you will have these codes, and you can even click on this little scroll icon here, and you will have both read and edit access to the source code. But anyway, once you import them, I imported a study, turn it on from the studies. If you imported one of the strategies from this video, you simply go into the strategies subtab and you would search for it here. This is the reversal strategy that I showed you. All you do, you double click to add it to your chart and apply. And just like that, very, very easily, you can have my custom codes, once again, saved locally and running within your Thinkorswim application. So daytradingstrategies.net, once again, linked in the description down below this video. Listen, at least go take advantage of the free codes. Why not? They're completely free. Sign up if you would like to access the Discord. I'll be in there talking to you tomorrow morning, and I look forward to that. Maybe at least read the reviews while you're on the website. Help decide for yourself if this is something that could help accelerate your personal trading journey. Sign up today and become a better trader immediately.